If we're going to be talking about our styles, then we're going to have to couch them in some sort of a plan. People, you've got to develop a plan. It has to be a written plan. Why? Well, first off, you need to do the work and make the commitment. But it's also easier to read than it is to remember, isn't it? Yeah, you say, okay, well, tomorrow I'm going to set my stop losses for 25 cents. Well, tomorrow comes and you get into that trade and you say, well, I know I think I said 25 cents, but I really meant 35. You're playing mind games with yourself, okay? On the other hand, if it's clearly written down on a piece of paper that it's going to be 25 cents and no more, now you have accountability, okay? We really highly recommend that you not only write this business plan, but you involve your family or your best friend in it so that you can maintain accountability. How about you make a bad trade, you blow a stop loss, and your significant other comes in and says, how's your day? And you go, well, fine. Did we make any money today in the market? Well, not exactly. You're skirting the issue, okay? And tomorrow, what you're going to do is you're going to try to make it up. What should you do? Significant. How do we do in the market today? Well, hon, I hate to admit it, but I need to work on my discipline. I broke one of my stop losses, and unfortunately, we lost about $500–600. I need your support to help me understand, and I will try to do better at my stop loss because I'm being honest with you. People, you can't do this if your significant other thinks you're a gambler, if you're a crazy loon. We love having couples come into the classroom because it involves them in this. This is a business. You've got to run this business, okay? You can't have people backbiting and, oh, you're going to just lose all the kids' college money, the house is gone, the dog won't have a bone. Okay, what are we going to do? We? Why is it suddenly we? You didn't come to class with me, okay? Now you've got to enroll them in this, okay? And you have to maintain accountability. How are you going to become accountable? Well, by setting up some rules, by building a roadmap to success. Now, no matter what your style is, you must establish a plan for it. First off, you have to have an overall strategy. How much are you going to fund your business with? How much is enough? How are you going to live? You guys are all very, very busy people. You have family, you have grandchildren, you have children, you got girlfriends and boyfriends. You got a business, you're working for somebody right now. You're going to start a whole new business, people. Where are you going to make the time? What are you going to give up? What are you going to sacrifice in order to have this new model in your very busy lives? How are you going to do it? When are you going to study? When are you going to do your homework for the next day's trade? Oh, I'll do it in the evenings. When in the evenings? Before or after dinner? You better start being specific. You set time aside and you create a schedule. I will read one trading book a month. I will read from 8 a.m. to 10 a.m. every Sunday morning before church. Okay, that's very clear. If you don't read the book, how are you going to be accountable? Well, you can turn to your significant other and say, hon, I need some support. You got to keep the kids off me. I've got to read this book during this time. I made this promise to myself. I need you to turn the pages. Wet my finger for me so I can turn the page. No. But you understand what I'm trying to say? You have to have some accountability. Obviously, that's the overall strategy. Each day, you have to have two strategies. You got to have your long gun and your short gun. You never come to the market knowing that, oh, it's obviously going to go up, so I only need my long gun. Wrong. Look at today. It was a classic example. Everything in the world pointed to an up day. Okay? It was a down day. It closed way down. All righty? The trading plan sets rules that you must break in order to violate your plan. People, you've got to have rules. And obviously we've talked about stop losses. That's one of the biggest ones. But what about share size? Okay? As an example, tomorrow I'm going to talk to you guys about really setting up a skeleton, a good framework. I don't want you trading with more than 100 shares for the first 4 to 6 weeks. Mike, I can't make money with 100 shares. I don't care. You're not here learning how to make money. You're here to learn how to trade. If you learn how to trade, you will have all the rewards you want. If you try to make money from the very first get-go, you will be focused on the money. You're not focused on trading. Again, I exhort you to go look up the word focus. It means to concentrate on one thing. If you're thinking about how much money you're going to make or how much money you're going to lose, you're not looking at trend. You're not looking at level 2. You're not drawing your lines. You're thinking about money. People, we open a trade for a handful of reasons. Guys, how about this? Stock has been trending up for the last 5 days. The market has been trending up for the last 5 days. Trend is running at 0.8. Tick is running at plus 200, okay? And the S&Ps are breaking out to a new high. Is that a good reason? Are that 5 good reasons to go long in your stock? You bet, okay? So now, do I think about the money or do I watch these 5 reasons? Yeah, this is what makes the money. Not worrying about the money, watching the points. And what happens if the S&Ps roll over? Has my risk just gone up 20%? Oh, okay. And all of a sudden, tick starts to come off of plus 400 and goes to minus 200. Has my risk just gone up 40%? Yes. People, if I lose 10 more percent, I'm a gambler. I should already be out of this trade. I've only got a 60-40 chance at this point. If I let one more reason go, people, I'm below 50%. What did I tell you if you trade with less than 50% probability? You're a fool. And fools and their money are soon separated. You need to focus on these 5 items. You watch them. You go from right to left, you go from left to right, you go back and forth, you go yes, 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 yes. Y'all looking good, you're all beautiful. I love you all, I love you, I love you. What are you doing over there, S&Ps? You're starting to, we can stiffen up there. Okay, thank you. Very good, stay, 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 stay. Hey, we're up $2, close them. And grab the $2. That's the only time you think about the money is when you take the profit off the table, people. You don't count your chips when you're sitting at the table. Do that after the trade is done.
So 5 elements were the S&P, the tick, the trend.
Oh, that was arbitrary. But, okay, stock was trending up for the last few days. The sector the stock is in is trending up for the last few days. Okay, trend is running at 0.8 or 0.7. Okay, the tick is running at plus 400. And the S&Ps have just broken through resistance. Probably 7 or 8 out of 10 times, that's a winner right there for a long. Huh?
I would hope.
Yeah, I would hope so. Okay, is it 100%? No, nothing is, people. A meteor could hit, you know, Quebec today, and the ripple effect would be horrible. People, you got to create accountability. You've got to start building confidence in yourself. What makes you confident? Well, certainly competence does. Knowing that you're going to follow your rules. That's discipline. Let me give you a really bad story, okay? When I first started trading on the floor, I would make money for Drexel, no problem. But of course, I would trade right along with my own account, and I was losing money. And I couldn't understand, how could I make money for the company? I can't make money for me. I'm doing the same thing. Well, I wasn't doing the same thing. I was breaking some of my rules. So what I decided to do, and you guys will appreciate this, ladies may not, but the guys will. Every time I broke one of my rules, I stuck a $100 bill in a glass jar. And at the end of the month, I gave the glass jar to my ex-wife. I'll tell you, that will tighten up your discipline very, very quickly. Okay, she had already gotten the gold mine, and I had already gotten the shaft. Giving her another $100 bill was really hard. But You start to learn real quick, people. You start to learn real quick. When I was at UCLA in behavioral sciences, they taught me if I wanted to make a worm crawl across a dish, all I had to do is put food in front of its head. Have you ever tried to determine which end of a worm the head is on? But if you really want to make the worm move, not only give them positive feedback, but take a little electricity and put it on its tail, and you can make them hop. You can make them jump through hoops, okay? Yeah. You need some negative feedback in your life, people. How about it's not a $100 bill and it's not your ex-wife? What if you took a $10 bill every time you took a rule, broke a rule, put it in a glass jar, and at the end of the month, you walked across the street and you gave it to a church that is not of your denomination? Still helping the poor and probably a pretty good deal, but you're not getting kudos for being a good guy and giving to charity, huh? But if you start to see that it really costs you money out of your wallet, maybe it's not a $10 bill, maybe it's giving up your favorite dessert for a week. Maybe you like to go to the movies every Sunday, that's one of your treats. And you say, okay, if I break one of my rules, I'm going to give up going to the movies for 2 weeks. People, you've got to become accountable. You've been letting yourself off your hook most of your lives in other things. And that's why you have a difficulty in the markets today. You're very good disciplined as a worker. You show up at work on time. You wear the right tie and jacket. You punch the time card on time. You're diligent about getting your work. But when it comes to money in the market, you go, well, it'll come back. What is that all about? How can you be disciplined in one thing and not disciplined in another? You ready? How do you start this plan? Well, it's really actually fairly easy, guys. I want you to go home after this class and sit down quiet, open up a Word file, Word document, and call it My Trading Plan, Rev 1. Okay, believe me, you're going to have tons of revisions already. And then sit down and write to yourself. Don't be shy, you're all by yourself, and go, I want to be a big-time trader. I think swing trading is going to be the answer. I really like those charts. Mike showed me those charts. I like those trend lines. I think I can make some money with them. I'd like to make $1,000 a day. Doesn't matter what you write. Once you start writing, okay, you are doing what? You're setting goals. Now, the questions beg themselves. How am I going to trade charts? Well, I better study charts. When am I going to study charts? Oh, I'm going to study charts between 7 o'clock at night and 8 o'clock at night, Monday through Thursday. I want Friday nights off. So by saying I want to be a swing trader, that means you have to learn technical analysis and you have to study it. When are you going to do it? How are you going to do it? Do I have the right charting packages? All these questions start to come up. And all you have to do is beg the question. What's next? What did I tell you about Columbo? There's always one more question, okay? Excuse me. We've already identified by this time our core stocks. We're going to have a couple. Strong stock in a strong sector, weak stock in a weak sector, and maybe an understudy for each, okay? We need to start writing down our risk management rules. How are we going to trade? I'm going to trade, I'm going to start for the first 6 weeks with 100 shares. I'm going to keep my share size small until I see some consistency. I don't care about the commissions. Can I see a trade? Remember, you may not be able to make money on 100 shares, but by going to 200, that 20-cent break-even drops to 10. By going to 500, that 20-cent break-even drops to 4 cents. Okay, it's just a matter of magnification. People, you should be darn right proud if in 3 or 4 months, every day, you can reach into your pocket and take out the $10 bill that you made today. No strings attached. All the commissions are paid, all the taxes are paid, all the fees are paid. You've got a $10 bill left over in your pocket. You can look at that and be proud. Mike, I'm not going to do all this for 10 bucks. Oh, yes, you are. Because if you can put $10 every day in your pocket, people, now it's just a matter of volume. Now it's just a matter of magnification. But what's going to happen? You're going to put $10 in your pocket, you're going to take out 20. You're going to put 20 in your pocket, you're going to take out 30. You're going to put 30 in your pocket, you're going to take out 10. You're not going to be consistent. Consistency, repeatability is what it's all about. I'm not here to teach you how to hit home runs. You want to be filthy rich? You want to get it all at once? Go to Vegas, put it on 00. They pay 37 to 1. Take your life savings, say, spin the wheel. That's how you hit home runs. You hit 00, you've made it. If you don't, the little stick comes out and takes your money away, okay? I want to be able to make a living at this. I want you guys to be able to make a living at this, okay? I'm going to give you tomorrow a complete set, not complete, I'm going to give you a starter set of risk management rules. I want you to embellish on them. I'm going to give you 10. People, I have probably close to 100. And some of mine are really weird, okay, because I have to control me, and I'm really weird. Well, how about this one? Well, I think I already told you this. I stopped trading at about 8:30, 8:45. I not only stopped trading, but because I'm a compulsive trader, I actually have to log off the computer and leave. If I sit there and I'm at a computer, you can come in and have coffee and talk to me. My left hand will sneak off and start trading Cisco by itself, okay? And all I do is run up commissions, okay? So I know that I cannot be around it. I have a certain time that I make my money in or I don't. And at the end of that time frame, I leave, okay? You need to start thinking about this. What are your peculiarities? How are you going to control them? What are you going to do? Some people get very, very serious about this. One of my students is from Switzerland, and he was trading. Okay, and he started writing me letters. He said, you know, Mike, I'm becoming unhappy. And I said, what's the matter? And he said, well, I'm really a family guy. I really like time with my kids. And because I'm in Switzerland, the market hours start just when the kids come home from school. And because I'm trading, I got to focus on what I'm doing. And I said, well, his name's Stav. And I said, Stav, I don't know what to tell you. I mean, you know, if trading is really serious and important to you, and your kids are really important to you, then you got to find a different time zone. Well, I didn't hear from him for like a month and a half, 2 months. He writes me, he says, Mike, I've moved to Florida. He took the kids out of a Swiss school, he grabbed his wife, got a job over here, and is starting to trade over here now, okay? He made it work, he made a commitment, and he made it happen, people. And now, that was a year or so ago. He's doing well, he's happy, okay? And that's the important thing, people. It's not money. It's a function of buying and having happiness. I learned a long time ago that money can't buy you time. It can rent you some, but it can't buy you time. And I'd much rather spend a week in Maui than lose 500 bucks, okay? So we need to be specific about what we do here. Once we have our plan, you need to review it on a regular basis. It says review daily up there. Well, I don't know. If it's working, leave it alone. Don't fix it if it ain't broke. You never do a review during market hours. I don't want you changing anything. People, we develop the plan and we work the plan and we work the plan and we work the plan until the plan clearly doesn't work. 1 point data is not enough. Oh, Mike gave me 5 reasons in class. I'll try it. Oh, I didn't make any money. Throw that whole thing away. No, you got to try it a couple times. It's probability, people. The chances of it coming up heads or tails, okay, is important. You got to give it a couple of flips. Then if it doesn't work 5 times in a row, there's something clearly wrong with the plan. Now we go out and change it. Otherwise than that, hopefully we just tweak it. We just twitch a thing or two here. The review process will help you find out where you are making or losing money. People, I want you to keep a detailed diary. What day, what date, what time, who was your contra, who took the trade, why did you open it, why did you sell it? And of course, the obvious things, entry, exit, and stop loss, profit and loss. Okay, now I'm going to give you a worksheet on that, all righty? So you don't have to remember and write all that down. But why do I want the day of the week? Well, what if you look down your trade diary and you see that every Monday you are losing money or just breaking even, and the other 4 days of the week you're doing well? What does that tell you about Monday? Should we look at Sunday night? Do you go out and play poker with the boys on Sunday night and have a couple of beers? Okay. And maybe you're going always out to dinner with the relatives on Sunday night and you're staying up too late. There's a reason that Monday you're not doing well on Monday. What if you were to look down and you looked at your 3 or 4 favorite stocks and you noticed that the 2 financials always seem to make money and the 2 biotechs always seem to lose money? What should your action be? Get rid of the biotechs. Duh. People, there's a basket of stuff. If we look in the basket and we throw out all the bad stuff, what's left over? Neutrals and goods. Okay? If it's not hurting me, it's a neutral. If it's doing me some good, it's a good. If it's a baddie, get rid of it. You may start to sort by duration. Every trade that I'm in on less than 5 minutes, I make money. But every time I hold a stock for more than an hour, I lose money. I'm a short-term trader. I didn't know it. I didn't know it until I looked at the results and I start to see a clear pattern in me. I make money when I only hold a spot for 5 minutes. I lose money if I hold it for an hour. But I don't want to trade for every 5 minutes. I want to trade for an hour. Well, you better find out why you're losing money then. But at least it makes you look, doesn't it? So we modify our trade plan as required, but we never do it during a trade. Boy, God help you if you change hats. You put on your investor's hat, you know. Oh, it's down here a little bit below my stop loss, but I know it's a good company. I'll put on my investor's hat and put this in my portfolio. At the end of the year, you're going to have a whole portfolio of losers. Okay? Yeah, no. You're in it, you're out of it, according to rule. Okay? No ifs, ands, or buts. Alrighty, I just mentioned that you're going to have your core stocks. Let's talk a little bit about stock selection. Okay? How do we find those stocks? How do we find that strong stock in a strong sector, that weak stock in a weak sector? Well, people, there's a tremendous amount of very, very good information out there. One of the pieces that we think, one of the periodicals that we think you should invest in is Investor's Business Daily, IBD. It's not always right, but the numbers are always accurate, and there's very, very little editorialization in it. Nobody's telling you why they think GE is going up or GE is going down. They just tell you what the numbers are on GE, okay? At the beginning of the week, they usually pick their top 10, 15 stocks in the NASDAQ in New York. But instead of saying, we're raising Academy to a strong buy, they tell you why they think it's going up. And they do it mostly through technical analysis. They do some fundamental. But they'll show you on a chart and they'll say, well, we believe GE is going up because the stochastics show it's oversold. Well, does that mean GE is going to go up? Well, we don't know. Let's go wait and see. But what if we notice that every time IBD says it's going up because of stochastics and it doesn't, what does that tell us about stochastics? That it's not a very useful indicator, that it fails often. Is that an educational, is that a nice piece of information to have? Yes. Sure, you bet. I mean, people, there's a cliche for everything. You ready? Here's another one. If you lose the money, don't lose the lesson. Okay? If the thing doesn't work, learn that it doesn't work. Don't keep using it and losing money. Learn something from every trade. Which ones do you think you're going to learn more from? Winners or losers? I hope you learn a lot more from losers. Okay? Good. Obviously, we also have the internet. Incredible financial information out there. Most of it free. 98% of it free. Okay? We also have news. We're going to talk a little bit about real-time news, wholesale news versus retail news. Needless to say, something like CNBC is retail news. Okay? It's delayed, people. The act has happened, a reporter writes about it, he sends it into home base posts it, CNBC buys it, and they finally air it. That takes time, okay? And so it's retail news. You think they go, and now, right from the front trenches, bull roar, okay? Hey, it's not from the front trenches, it's from the editor's desk, and he had to read it, okay? And he's a slow reader. His lips move when he reads, okay? Anyhow, let's take a quick look at a couple of these. IBD is put out by William O'Neill, obviously a very important man in the publishing business, but a pretty darn good investor too, okay? Can't really call William a great trader, but he does a pretty good job of putting information together. IBD is really, should be called TBD, Traders in Business Daily, because it really has a lot of good trading information in it. It sets the stage each day by reviewing different columns on credit markets, futures, business and the economy, and global, dollar, yen, euro. It's all there in that one paper. You guys go, well, how do I watch all those things? Here's one way, okay? Now, I haven't checked it out recently because Carol takes care of most of my stuff for me, but I think this runs about $300, $329 a year, okay?
Online now too.
Right, yeah, they have it on. I still have the actual paper being thrown on to me at 0 dark 30, but you can have it all online so you don't have to line your parakeet cages, okay? Now, one of the things that they do offer that we found was pretty cool is they have the IBD Smart Select system. And on the quote page, everybody understand a quote page where they show you the stock and the prices and volumes and the highs and lows for the day, okay? They have this little sequence of numbers and letters. They actually have 6. They have a composite number, okay? And then they have these other 5. And we're just going to look at this. We disregard the composite, okay? And OTA, we have agreed that we are going to draw the line in the sand with these numbers up here. It's an arbitrary number, okay? It says 8585 BBB. Well, the first 85 is an earnings per share measurement. It measures both long and short-term earnings over the last 3 quarters and the last 3 years. It then ranks this company relative to all other companies in terms of earnings per share between 1 and 100. So an 85 is what? It's in the top 15% of all companies. You ready? Now, why didn't I choose 100? It's got to move somewhere. I don't want it to be at the perfect top, do I? No, it's got to have some room to grow, but it's still got to be strong. How about the second 85? Well, that's a relative price strength rating, okay? And it measures price change over the last 12 months compared to all other stocks. And again, it's rated on 1 to 100. If we come up with an 85, we've got ourselves a pretty strong growth indicator between these two. Well, Mike, what if I found one that was 84 and the other one was 86? It's close enough. I just got you guys started. Okay? We have to put something on the board up here. You understand what I'm saying? What if you found one that was 90-90? Would it throw it out? No. But we got to start somewhere. Okay? What about the second set? Well, now we're into the BBB. And the first B is industry relative price strength. Remember, this 85 here was just relative. This is inside its own industry. So instead of comparing it to all stocks, it's only comparing it to other stocks that are in its own industry. And again, it's looking at the price action in the last 6 months. Here we rate A good, E bad. So we're looking for a B. Again, we don't want the pick of the litter. We want something that has some room to grow. Okay? The second B is sales plus profit plus return of equity. Okay? It measures the growth rate over the last 3 quarters, both before and after tax. Okay? Again, A is good, E is bad. We're going to choose a B at least. You ready? Accumulation, distribution is the last B. And this isn't just simple accumulation. IBD puts some secret sauce in it. They won't tell you how they actually figure it, but it's very, very good, okay? So if I find a stock that has an 85, BBB rating, this is a pretty good candidate for a long gun, isn't it? What about a short gun? Well, we argue back and forth all the time. I would look for something probably just under 50. Something like maybe a 45, CCC. Okay? Again, I don't want to go 10 EEE. I don't want the bottom of the barrel. It's got to have some room to fall. Alrighty? But that's how we might look up some short stocks. Now, does that mean we immediately just find one of these and go out and play it? No. What you do is you go to IBD and you highlight. If you have the newspaper, you take a yellow highlighter and you go down through the different indexes or the different exchanges and you mark out all the ones that you like that match this criteria. You'll end up in about 10 minutes with between 15 and 20 stocks that are strong and 10 to 15 stocks that are weak. Now we need to go inspect these stocks to see if they match our other criteria. Okay, where might we take these stocks to go look? Now, on the slide here, we have smartmoney.com. By the way, you guys have been provided with all the URLs for all the websites I show you. It's in your books already, okay? So here we are on the front page, and I'm just going to walk you through a couple of things. Now, guys, you need to go out here and click on all this, but let's work with just a couple of things. Does everybody see over here in the left center where it says quote? Let's put in one of our favorite symbols. How about Cisco? Okay, and type that in there, and then we click on the red button, and this will get us a detailed quote of Cisco. Now, I want to show you a couple things about this. First off, note that all the quotes, some of them have highlighted or hyperlinked, okay? So we can get actual definitions. This is very, very important. I've already mentioned a little bit about this. But certainly we can see that today's high in Cisco is 2265 and the low has been 2211. The volume so far is 28 million and its average volume is 50 million. That's average daily volume. But I want to caution you on this. Remember, if you go to a website to get your average daily volume, you got to go to the same website all the time because they define it differently on different websites. Let's click on this hyperlink and see what we get. Now, as it loads up here at the very top, it says the average volume is the total volume for the previous 3 months divided by the number of trading days, okay, in those previous 3 months. Alrighty, so this guy is doing what? There's about 20 trading days per trading month, so they're averaging about 60 days. Well, I told you guys to average about 20 days because that was going to bring you more in vogue. But I also made the caveat, if you are going to be a longer term trader where you're going to hold a position for a couple of days, maybe even a couple of weeks, maybe you do need a longer term average volume. The point here is be sure you know what you're looking at and look at it the same way each time or do it yourself. Okay, now let's go back here and back to the quote. Let me bring this, scroll this down just a little bit for you. Alrighty, and of course we see our PE ratios in 52 weeks high and all that. We see the shares outstanding, and boy, I mean, there is a ton of them. There's what, 6 billion shares outstanding. That's quite a float. Later we're going to talk about shorting, and you'll understand why having a large float is very important. How about this right down here? 63%. Oops, what did we do there? Things scrolled away from me. Hang on a second, guys. I'm fighting here with the internet. Okay, 63% down here is owned by institutions. Now I want you to think about that a moment. Would you say that fund managers are kind of birds of a feather? So if a lot of stock, and 63 is a high percentage, okay, what if Janus Fund suddenly doesn't like Cisco and they start to sell Cisco? Do you think that Oppenheimer and Fidelity and Franklin Templeton, maybe they wouldn't like Cisco for the same reasons that Janus Fund didn't? And because they have such a large piece of the action, this could cause a great domino effect. So you got to think about things like this. It doesn't matter on a minute-to-minute basis. They're not all going to change their mind at 9:59 and 30 seconds. But if there was a sell-off and you were going to be in a position, I don't know, the thing's refreshing again there. If you were going to be holding this thing for a week or 2 weeks and something happened, this could cause a real great downdraft. Okay, everybody with me on that? So here's some really good things. Again, I need you guys to come along in here and click on liquidity ratio and shares outstanding so you have a clear definition in your mind. If I read everything to you, A, you won't remember it, and B, it'll make for an awful long day. But there's a couple of other things I really want to point out here. You'll notice we have these tabs right across the top. We're on snapshot. But we talked about our competition, okay, and our dog sled team. We want to find the leader in this group and its 2 first lieutenants. So let's click on competition, and I think you guys will find this really fascinating. Again, let me scroll down to the center of this just a little bit for you. Over here on the left-hand side, we see it has a competitive analysis graph. And we can see right now Juniper's at the top, and then Cisco, and then Comms, and CMNT, which is computer network technology, and finally Sycamore. Now, these are arranged over here by current share price. You guys see the rank by box? Well, what if I drop that down? Now there's a whole bunch of different ways to rank them. And I'm just going to kind of scroll through them, but I want you to watch the graph on the left. Okay, so what if we took market value? Well, now it's Cisco, Juniper, and Comms are the top 3, huh? And then we go to revenues, and it's still Cisco, Juniper, and Comms. And then we go to net earnings, and now it's Cisco, Juniper, and computer network technology. And to one more. And now we got Juniper, Computer Network, and Cisco under 5-year sales growth. And let's do another one here. None of them have a 5 years earnings growth. It's been a tough last 4 or 5 years, guys. Okay, how about net profit margin? Again, Cisco, Juniper, and Computer Network Technology. So why just scrolling through these graphs, does everybody see that these are the top 3 dogs in this sector? And that if one of them was going to run, it would probably bring the other 2 along, unless it was specifically bad news. What do I mean by that? Well, it's possible that Cisco could get a $1 billion contract that Juniper was hoping on. In such a case of that kind of news, Cisco would go up and Juniper would go down. But generally, if there's just good news in this communications network sector, all of them would either run or fall based on whether it was good or bad news. Now, where does this graph come from? Well, it comes from all this data down below. And again, I really want to point this out because this has got some really good stuff down here. Oops, a little too far there. Hang on. Here is all the data that made up that graph. Current share price, market value, revenues, short interest, forward PE, PEG. We talked about our stock criteria is beta was one of our things. And here we can see that I gave you a beta range of 1 to 1.9. So Cisco at 2.2 would be just a little fast for you, okay? 1.4 on 3Com, well, that's within the range. Computer Network is 2.1, and who's that guy? Juniper. Juniper's 3.6. You certainly wouldn't want to play Juniper. So even though we found the top 3, they would be ruled out under your criteria because they're just a little too fast. Again, let's go over here. As I said, beta, when we explained it in our criteria, is just a relative speed compared to the S&P 500. But it's hyperlinked. So if you don't remember that, All you do is click on it, and it brings up a definition. If you'll read at the top up here with me, beta measures the volatility of a stock's return relative to the S&P 500. It is based on a 36-month historical regression of the return of the stock compared to the return of the S&P 500. So, if you had a beta of 1.5, that indicates that a stock tends to move 50% more than the S&P 500 in the same direction. So if the S&P rises 10%, then the stock would rise 15%, 50% more. But if the S&P falls 10%, then the stock would fall 15. Well, in today's world, what is the S&P moving at? Well, it's moving 2 or 3% per day. So if it moved 2 and I had a 1.5, then we'd expect our stock to move 3%, right? Very good. Okay, so again, one of the things I really like about Smart Money is that not only does it have a lot of good information, but it has a lot of good educational information. If you're not quite sure of what a PEG is, price to earnings to growth ratio, you can click on it, read the entire definition, and start getting it really clear in your head what that is. Ready? Alrighty, what else do we have up here? Well, we do have some other cool things. How about insider trading? We've all heard a lot about insider trading recently, but this is not the bad stuff. This is the legal stuff. Okay, let's click on that. Okay, now, red circles are intentions to sell, red dots are sells, green circles are intentions to buy, and green dots are buys. You can see, are there more sells than there are buys here? Yeah, certainly. We got a lot of big ones. We got one little tiny green one down here. So let's go look and see what these are. Now, you saw as I moved my mouse over them, let's put it on one of these circles. Here we have an intention to sell. It was dated on 3/19/04, and Randall Pond, who is a director of Cisco, wanted to sell 137,000 shares at a price of $22.35 for a market value of $3 million. Okay? Now, we do not see a sell immediately. Now, this is called a Form 144, this intention to sell, and he has 90 days to do it in. So even though he had the intention of selling it, he did not sell it during the next 90 days. Now, we look at this one. Here we see, who is that? John P. Morgridge, also a director, wanted to sell 100,000 shares on 6/23. Aha. Here's the actual sale. Oh, there's John. Okay. And he actually did make the sale on the same day. So his intention to sell was on 6/23, and his actual sale was on 6/23. So he did as he said, and he also put 2.4 million in there. Now let's scroll down. It's a little easier to look at this. By the way, here is the, what do you call it, the icons up here, so you understand sale, purchase, intention, and intention to purchase. There's also some other letters. We'll look at those here in a moment. Now, who are we really looking for? Well, guys, you can do a little research if you like, but mostly I'm looking for the CEO, the Chief Executive Officer, the Chairman of the Board, and probably the Chief Financial Officer. All the days, they got hundreds of directors and officers and stuff, but of course if I wanted to know a little bit more about them, I could find some things out, okay, and we'll check into this. Now, can you see up here, right at the top on 6/24, there's our John Morgridge again. This time he was giving. A G stands for gift. You see how it's hyperlinked? Let's click on it. And the definition comes up. Yeah, it's a stock gift. Boy, he is a sport, isn't he? How would you like to give away 59,000 shares at 24 bucks, huh? That's a lot. And right below that, we see his sale of 100,000 that we just saw up there on the red dot. Okay? Let's scroll down. I'd like to find somebody a little bit more important. I don't see anybody there. But can you see that we have lots of pages to look on? Let's just go to the next page. What I'm trying to do, guys, is find you somebody like John Chambers. And we just don't see it. Just da-da-da-da. Oh, Chief Financial Officer, huh? Elizabeth Raphael. And let's have a quick look at Elizabeth. By clicking on her, okay, we can see the date of what she was, our transaction. She was doing a sale, okay. She has a market value of 1.3 million that she wants to sell at a price of 23. Now, often they will show you their direct and indirect holdings. So it gives you an idea. Now, what if she owned $100 million worth? Well, then a million is only 1/100th. That isn't a big deal. Okay, let's go back here to the list again. Okay, and now obviously I don't want to go back to February or 2003. We want to stay here. But again, why are we looking at this? Well, I want to find out if the rats are jumping ship. Would this help me decide whether to make this a long stock or a short stock? Well, obviously, if the big directors are selling out significant portions of stock, they don't think the stock's going up, they think it's going down. And conversely, we can see back here in whatever it was, May 17th, we see that little green dot. I'd love to see that be a great big green dot and it be John Chambers, the CEO, buying a couple million. Boy, that would help me decide whether to take this stock long or short. Everybody with me so far? Very good. Okay, now there's a whole bunch of other tabs. We'll come back here. This is a great site, okay? And we'll look at some key ratios and financials. But again, I think part of your job is I need you to go out here and take a quick look. Now, before we leave this site, I want to show you one other really cool thing on this, okay, and we'll talk about it. Can you see where I've gone up here on the main tabs? I've selected maps, and I'm going to click on Map of the Market. Now, this is the S&P 600. It's for free. If you'd like to see 1,000 selected by S&Ps, you have to pay for a fee. Now, I'm going to move the control panel over here to the right. Let's make it nice and big. Here we go. And bring that control panel back. Okay, now, if you look at the top of the control panel over here, we are based on yesterday's close. And you can see that anything that is bright green is greater than 6%. If it's dark or black, then it has very little movement in it so far relative to yesterday's close. And if it's bright red, then it's down upwards to 6 plus, or greater than 6% down for the day. If you look at the map, and I'll put the laser pointer on here, you can see in the upper left hand we have the major industries: healthcare, financials, energy, utilities, basic materials, capital goods, transportation. Across the bottom we have consumer cyclicals, technology, communication, and consumer staples. Now, it kind of looks like a wheat field if you're flying over Kansas in the daytime. Each of these squares, like this one right here in the center, is the size of its market capitalization relative to its other neighbors. Now you can see right where the word financial is, we have a great big box there. That's the biggest one in there. So that's going to be the largest company in the financial arena. So if I move my cursor over it, who is that? Oh, it's a whole bunch of little ones, you see? So we have to kind of find out they're all flat. Now, if I changed it, we could spot them a little easier. Let's go over here back to our control panel, and we'll select what it's looked like over the last 26 weeks. Now we can start to see a lot more definition in the size of the companies. Up here in energy, we see ExxonMobil, which appears to be the biggest of the big in energy. Okay, and we can tell over the last 26 weeks it's been up 10.78%. You ready? Let's go back to the close from yesterday. How about down here in technology? Here's the biggest one in technology, and of course that's Microsoft. Okay, and we can see that Microsoft is pretty much flat today. It's down 0.7%. Why would I look at this? Well, there's a number of reasons. Again, if we look up here in the upper left-hand corner in healthcare, we can see everybody is in the doldrums, but there's 3 or 4 companies that are turning green. How about this guy, Shearing Plow? Have they yet to fall, and maybe that's a good short, or are they leading the health sector out of the doldrums and therefore might be a good long? I don't know, guys. I'm going to have to do some drill down and do some work to figure that out. But guys, you see how the contrast gives us an idea of what might be going on in that sector. Now, what do I mean by drill down? Well, you can see where it says shearing plow and it says click for more detail. Well, if I click for more detail, guess what it gives me? It gives me those same tabs we just looked at. Industry, the real time, the snapshot, the charting, the earnings. Here's our competition that we were just out at, and our insiders that we were just out at. Now, if I click on this, it'll take me right back there, and we can do the drill down. So you can get a lot of information from these guys. Now, there's a lot of other things going on. Let me put the controls back up here. These darn pop-ons keep killing things, okay? Again, I kind of showed you this. This is set up for the close, but what about the last 52 weeks? Wow. Does everybody see that the right-hand side of the screen, energy, utilities, basic materials, capital goods, consumer staples have really done well in the last 52 weeks, okay? How about since January? We'll use year-to-date. Well, they still did better than some of the other sectors. You can see that technology is a lot of red in it. The financials are pretty much flat, but energy, capital goods, consumer staples, a little bit in communications there are kind of up year to date. We can also highlight our gainers for now these are the gainers over the last year, or for year to date. Okay, let's do it for today. Okay. So now you can see our gainers are highlighted in yellow, and they're TECO Energy, and over here on the left is JC Penney, Pier 1, USG, Iona. How about our losers? Okay, we've got Computer Associates, Yahoo, Neo Magic, Tupperware. Now, if you can't remember somebody, you could always type in the name like Citicorp, and as soon as you do that, it highlights it and opens up your drop down. So it found Citicorp for us real quick, okay? So, and of course, I don't like it, but you could actually make it blue and yellow instead of red and green. I prefer the red and green. Alrighty, so this is a little bit about the map of the market. Let me close this one and we'll do one more in the maps, because we can go in. Oops, I didn't mean to do that. I opened the same one. Hang on a second. Okay. Oh, by the way, you see where it says Market Map 1000 and there's a dollar sign next to it? That's a pay for. Okay, so there you'd have to pay for it. Alrighty. But there are some sector maps, and we're looking at the major industries. Here is the technology, for instance, and give it a second to load up here. Now this is a blow up of that one sector. So now the overall technology has been broken into hardware and equipment, semiconductors, communications, technology services, and software. And again, you can pretty much guess who this big box over here in software is. Yeah, Microsoft, the biggest of the big. And here's International Business Machine, which is just about as big as Microsoft is, but they're put up here in hardware and equipment. And again, we still have the same drill down that we had on the last map. Now again, this is just one sector. We also have basic materials, consumer cyclicals, energy, financial, all the major industries. So if I just wanted to look at the financial sector, give it a second to load up, and bingo, now we have banks, and let's not do the cursor there, that drives them crazy. Banks, diversified financial, security brokers, real estate. Look at all the little companies in real estate, okay? And then insurance. And we can find some really tiny little guys down here. Here's Coger Equity, okay? Trading for around, oops, my mouse slipped. How about Kilroy? Trading at around $35. Really tiny ones in here. Glenborough Realty Trust. But again, if this sector, notice how the whole sector is down today. Alrighty? So this gives you an idea of what we talked about, sled dogs and all that. Again, maybe I want to go out here and click on Simon Property, take it to competition, and find out who the top 2 or 3 lead dogs are in the real estate sector, because that'll help me find them. Alrighty, any questions on smart money? People, I've said this before, I'll say it again. We need students, not pupils. Pupils are people who sit in classrooms. Students are people who take an active participation in their education. Okay, let's get back to the slides. Now, I showed you a few things. We looked at IBD. Do you think that Yahoo Finance might have some good information on stocks? How about CNBC.com? How about Bloomberg.com? How about CBS Market Watch? They're all on your list, by the way. I'm not cheating you out of anything.
CNBC kind of still be tailored towards the retail side?
But still, they have stock screeners and they have research tools there. And I'm going to show you later how to look at sectors and find the leading sector and all that. But let's get back to our core stocks here for a moment. So we need a strong stock in a strong sector. We need a weak stock in a weak sector, okay? What other criteria do we need? Well, first off, people, OTA really firmly believes that you should play with real stocks. Stop playing around with these penny stocks. You know, these $1.50 and 49-cent bottom fishing stocks. They're dangerous, people. They're very, very dangerous. The worst that happens, you get into them for a huge share size because you can. You know, $100 buys an awful lot of nickel stocks, okay? And then, but the thing is it goes down 1 penny and it stays there for 6 months. You can't get your money out. You can put your money into something else that's moving, but it's, oh, well, I'm not losing much, but I'm not winning. I'll just let it sit there. You're losing potential profits. You could take that money and put it to work. You could put it in a bank and make more money than letting it sit there in a loser. Is that true? That's true. It's true. Why don't you do it? Okay. So now I just chose $80 as a top because Al made a very good point earlier. A lot of you guys don't have tons of money. And if you want to buy 1,000, you have to have $80,000 worth of buying power. If you're on a standard margin account, that means you have to have $40,000 worth of cash. If you're in a day trading account, it means you have to have at least 20, which is, you already have 25. So, but do you understand? I don't care how high you go. I don't want you going below 15. Alrighty? And I just put that so that you don't feel tremendous amount of great trading stocks between $25 and $40, people. Huge amounts. I want you playing with an average daily volume. How many shares does it trade on average a day? I want you playing with 1 million plus. Guys, I play with stocks that have 5, 10, 50 million. Cisco average daily volume is around 54, 55 million right now, based on the last 20 days. Okay, so why? Because they're liquid. Liquidity means it's easy to get in, but more importantly, it's easy to get out. If you start playing with stocks that only have 500,000 or 200,000 shares on average, people, you can get trapped in them. We had one guy on the trading floor at Momentum. He kept putting his stock up for sale all day long. He goes, nobody's hitting me. I said, what's your position? He said, well, I got 2,000 shares of this stock. It's about a $4 stock. Kind of looked at him. And I said, what's the volume so far? He said, oh, about 5,000. Oh, excuse me, you bought 2,000? You're 40% of the market? Okay. He's got to find a whole bunch of people who aren't real smart to line up, okay? If he's 40% of the market. Don't do that to yourselves. We haven't talked about this, but we will. ATR, average trading range. Now, we looked at level 1 information. We know what a range is, huh? The difference between the high and the low. Well, what is its average range? I want you to find something that has at least $1 movement in it, okay? But is a little bit less than 10% or less than, what do I have up there, 8% of price. Well, if you're playing a $50 stock and it moves $8, okay, that's 20%. That's too darn fast, okay? Or it's not 20, whatever it is, 16, 18%. In a day, average daily trading range. Well, sure, you're only going to get about 50 cents out of it if you, by the time you spot it, by the time you trade it, by the time you close, you're going to get something out of it. If it only has 25 cents trading range in it, and you have to make what, 20 cents on 100 shares to break even, you're not going to do it. So you got to have some room, you got to have some leeway, okay? But I don't want you playing with something that's too fast either. If you start playing with 10%ers or 20% movers, they're probably very volatile stocks. If they are, the next one will probably control them. And we just looked at beta. I want you playing with a beta of 1 to no more than 1.9. Okay? Why? I don't want you getting too fast with these stocks. Now, Cisco is borderline. Right now it's trading, it's probably a little higher today because of the good news and the upgrade on it. But its average right now is right about 2.1. You ready? So it's just on the edge. And again, these are guidelines, people. If you found the perfect stock and it was a 2.0, I wouldn't tell you not to trade it. Just be a little bit more careful. It's going to be kind of a fast one for you. Okay? And then the last item down here. How about something you know about? Okay? I mean, if you don't know anything in the world about DNA, you don't know how to spell dinucleic acid, you don't know what a double helix is, you don't understand genomics, why are you playing Amgen? You won't understand the news. Today we discovered that the Jackson rod completely fit into the Framsit. Is that good news or bad news? I don't know, okay? And if I don't know if it's good news or bad news, I don't know which way to go with the stock, okay? So if you've been involved in software, obviously you're going to gravitate to the software industry, okay? If you've been involved in electronics, you're going to look into it, or financials, go to the industries you know about, because then you'll be able to make valuations based on news, whether it's good news or bad news. You'll understand what is happening in the stock. This is all very, very important stuff, people. Questions so far on the core criteria? Are there more criteria you could add to this? Sure, but this is the basics, guys. This is what you have to have. Now, this is a fun subject, isn't it? Losing professionally? Okay. Well, you've been losing as amateurs all your life. I thought I'd put a little spice in your life here. We're going to show you how to lose as a professional. People, we've already agreed that we are allowed to take small losers. Okay? How do we keep them small? That's how you lose professionally. Yeah, we're going to use stop losses. But we're also going to start getting an idea of how to calculate risk scenarios. All righty? And let's just jump right on into it. We took a look at a sheet like this earlier, okay? And what does it say over here? What do you notice about this trader's actual trading day? What is good? What is bad?
He loses money in the beginning, he makes money at the end.
Okay, you think so, huh? Let's talk about this thing a little bit more carefully than that. Let's go back through the litany. How many stocks is he trading? One. Is he out there with huge share size? No. Notice how his share size starts dropping off just as he starts to go red? You guys see that the last time, what time is it? 10:02? Market's been open how long? 32 minutes, huh? How many tickets has he done already?
130.
Oh, how many tickets did he do in an hour and a half? What was it, 137? Okay. Wow. Might this guy, if he's the same trader, be over trading? If the other one was good, this one's a little bit hot. That makes sense? It looks like he might be going a little too fast. Alrighty. Let's take a look at his P&L over here. He's making 250, 250, 75, 118, 100, 125, 25, 35, 0, 0, 0. lose 6, lose 12, lose 12 and a half. Guys, can you look at this and see how he's eroding? He's going from very profitable to moderately profitable to small to flat to losing. Okay? That's not good, is it? But what is good? He's seeing it happen. So now he starts to look at his share size, and he drops from the 5s and 400s immediately down to 100. Why? Because he's a trader. He has to trade. He has to figure out what's wrong. What has changed here? Is it him? Is it the market? Is he getting tired? Has he been trading so fast he's burned out already in a half an hour? What is it? Does he need a cup of coffee? Okay. So he has to go back in and he has to test. But he doesn't have to test it with 500 shares, does he? He can go in there and test it with 100 shares. So instead of losing 250 or losing 55 bucks, he's losing $6, $10, $12 until he figures it out. What if he doesn't figure it out in 5 or 10 trades? Stop for the day. I'm done. Okay, there's always a run away and fight again another day. Okay, go home and let's look at these trades. I mean, we can only see again, what, 20 trades here? There's 230 of them. Okay, now take a look at his profit and loss up here. It looks like he's making 3,000. But now do you guys see that his ticket average isn't $56, it's 13. So if he was paying $10 a ticket, he's still up about 600 bucks, huh? 3 times 200, 600, 700 bucks. But what if he's paying $15 a ticket? He's losing, okay? He's upside down 230 times a buck and a half or a buck and 3/4 there. So, yes?
So the P&L does not count the commission?
No, most of them do not. Okay? None of them count them perfectly, Carl. Okay? Most of them give you gross. The one we've been looking at, the one by Rush Trade, does take in account for your ECN fees and your commission, but it still doesn't account for SEC fees.
Okay.
So they can't do that until overnight. So closed profit and loss, $3,022.63. That's good, unless he's paying $3,000 or $4,000 to make it. I know you don't. It's not up there, so you can't see it. My point is that his average ticket, he's making $13.14. Times 230 is $3,022.63, or 3,000 divided by 230 is $13.14. However you want to look at it. Okay. What if his ticket cost is $15?
Yeah.
Then he's losing. He's only making $13 per ticket. If he's spending $15 to do it, that's not a good deal. What if he's spending $10 a ticket? Well, then he's okay. He's making $3.14 times 230, about $600, $700 for that half an hour. It's not slave wages, people. I mean, yeah, it could be a lot better though, huh? And that's what we're talking about here. How can we hold these guys to smalls? How can we do analysis of situations? That's what we're trying to get to. In order to be a successful trader, you must follow the guidelines below. First, you have to analyze trades before you enter them. Here's ways to lose money. Boy, this looks good. I'll bet you this will go up. Let's take a chance. Okay, those are all gambling thoughts, aren't they? I bet this one's a winner. Okay, as soon as you hear your mind talk in there, starting with those gambling terms, step away, step back. We need to analyze. We got to calculate. Once we open the trade, we immediately manage risk. What does that mean? Well, if I'm long, if I went long, I bought the product, my eyes are riveted to the bid. Why? That's where the buyers are located. If I bought, I am now a seller. If I'm a seller, I need buyers. Where are my buyers? Are they still there or are they deserting me? If they're deserting me, that's not good. As Martha would say, that's not a good thing. Okay? So we immediately in order to manage our risk, need to set stop losses. Now, these can be mechanical or these can be mental, depending on your discipline. One of the big problems with mechanical stops is that your market makers can see them. Everybody can see them. You ready? And if you guys all, let's say we bought Academy for $30 and we all set our stop loss for $29.75, exactly 25 cents below, okay? And he had 10,000 and he had 10,000, he had 20,000, you had 30 and she had 40, and there's 100, 200,000 shares, all ripe to be triggered by a 1 penny trip, okay? So a market maker goes, look at this, 200,000, 25 cents below market. Throw a 100 share trade at $29.74. That print goes through, okay, and it triggers all your orders, and 100,000 plus shares come to market at market. Now, they're immediately going to go up towards 30, aren't they? Isn't that where the market is? But if the market maker can buy 100,000 at $29.98, he just made 2 cents on your backs, snapped you out of your trade, cost you a loss and a commission, and if you went back in, guess what? You get to pay another commission. Do you think your market maker and broker dealer do this to you? Okay.
I didn't know that I thought that was software that was doing that. I didn't know it was actually going on.
Oh, no, they see it in the open order books, okay? So now there is a stop, it's called a trailing stop, which is resident on the host direct access trading server. That is not seen by the market. So again, you have that protection. But a trailing stop should only be used in profitability. We'll get there, don't worry on trailing stops. But a regular stop market or limit stop, okay, are seen by the entire market and are often used against you. Not every day, not in every stock. It's got to be a significant amount for the guys to get hungry. But obviously, what happens when your broker-dealer is also your market maker? You guys already named Schwab on the level 2, huh? What if Schwab's customers are placing a lot of stop orders? You don't think Schwab, the market maker, doesn't know that? Duh. Okay, and they shear the sheep. Bah, bah. You know, oh, I'm cold, why? You know. You need to be systematic, people. You don't let your emotions get out of control. You don't become angered or euphoric about your trading. When I'm sitting at a trading desk, I talk to the screen constantly. I'm lonely, you know, I'm a lonely guy, okay? I'm sitting there, come on, Goldman Sachs, die like the dog you are, get off that bid, you know, come on, you can do it. I want to see that trend come up now. But you'll never know whether I'm winning or losing money. Until the end of the trading day, you won't know. There are times when I log off and I go, yes! And there's other times I walk out and I go, you know, and go to the beach and sit and watch the surf for a while. You know, look, another wave. You know, you can't let your emotions get involved in this. And if you do, if you start to become angry or you start to become happy, okay, you're not focused anymore. You got to have a plan. You got to follow that plan. The level 2 will help us determine good entry and exit points, relative risk, and the direction of immediate momentum. Now, we're going to work with static screens here, and we're going to play some games. All ready? People, I am not trying to teach you to play for 2 cents. That's not the game here. But because I have a static screen, we're going to be talking about 2-cent winners and stuff like that. Now, does everybody clearly see, okay, where support and resistance is on this level 2? Anybody want to articulate it? Okay, what's the first thing that we should do? What's the first thing we should do as good traders? Do we need to look down this list and see if there's anything odd? Notice that everybody is a 3 or a 4 digit, except here and except here. Here and here. Those are 5-digit numbers. First thing we want to look for is abnormalities, okay? So now we look at this and we say, wow, we've got 21,000 in just these two right here, okay, who wish to sell. What do we got over here? 500. And even if we took down the 07s, we only have another 3,000. So in the immediate direction, which way is there buying pressure or is there selling pressure in this? Selling pressure. Good. Okay.